Good morning, Gunnar. How are you?
Good morning. I'm doing well, Alex. How are you?
I'm good, thank you. I'm great, thank you.
Great, great.
Thanks for having this
I wanted to be
conversation
great
with
too.
me. It came up with one of my buyers just yesterday, so I
Mhm,
wanted to take a moment to stop and just talk about it. So, credit score.
mhm.
It feels very mystical. Like people hear about it, talk about it, don't really know what it is or how to improve it. And there's a lot of misinformation out there. So, talk to me quickly at first. Is credit score the most important thing when a buyer is kind of looking to get a loan?
I would not say that it's the most important, but it is the first hurdle that must be jumped to get like when I speak to somebody based on credit alone, if they're not where they need to be, that is a quick end to our financing conversation. Because if they're sub, six hundred, 620, they need to work on their credit. And sometimes I can help them do that. We have programs that we can help them. I can take someone from a 600 to a 620, but I can't take someone from a 400 to a 620. I can't do those 100-point swings. There are people more qualified at the end of the day for that. And I have those referrals as well, but it's not the most important, but it is, like I said, again, it's the first hurdle that we've got to overcome to get someone approved for a mortgage.
Okay. So I could have $100,000 in the bank, but if my credit score is a 430,
Mhm.
I can't get a loan.
That is correct.
Okay.
Yeah.
I think that's super helpful information because I didn't know that when I was a buyer,
Mhm.
and we had to use my husband's credit score, and the whole situation changed around for
Yeah.
us. So I think people don't understand that. Thank you for sharing. Um, so now that we do know that, what is a necessary credit score for an FHA loan, and then what's a necessary credit score for a conventional loan?
So funny enough, you can actually do a relatively low credit score with conventional if you put enough down. But we'll just keep it black and white for today,
Okay.
and just kind of do the basics. So with FHA, a minimum is a 620, and if you have a 620 score, you need 2 months of reserves
Okay.
after your cash to close. So 2 months of reserves is two full monthly payments in the bank at a minimum. If
Okay.
you have a 620, if you have a 640 and we take you FHA, then that requirement's waived. You don't
Okay.
need to have the 2 months reserve. So a 640 is really the target line to get into a mortgage. And again, FHA is 3.5% down. So a 640 with 3.5% down.
So who qualifies for an FHA loan?
So FHA is commonly, I guess, a common misconception about FHA is it's a first-time homebuyer program. It's really not. However, it does cater to individuals whose finances mimic first-time homebuyers, right? So first-time homebuyers, typically speaking, lower credit scores, not a lot of cash in the bank, so we're not looking at 20% down. So FHA is a program that's going to favor a lower credit scoring borrower and allow them to get in a house with a relatively minimum down payment.
Okay.
So as you just cannot have more than one FHA loan at a time.
Okay, at a time. So if I had an FHA loan 5 years ago, but I've
Mhm,
been renting apartment for the last year,
mhm.
I qualify to use an FHA loan.
As long as you buy it as a primary.
Right, okay. Yeah, y'all don't want us using it for investment properties.
You That's another conversation, but
Okay.
yes, there is a way to do it. So you can buy a duplex,
Right.
and do 3.5% down and get some income producing. You can actually buy up to a quadruplex with FHA. But
Okay.
again,
As long
another
as you're
conversation.
living there too.
We'll put a pin in that for another
Okay.
conversation. But yeah, that's actually kind of a cool product.
Thank you. Okay, awesome. So with a conventional loan, is it the same, like 620, 640, or what is the credit score there?
Conventional loans are going to, especially if you're putting minimum percent down on conventional. So if you're a first time home buyer, minimum percent down on conventional financing is 3%.
Okay.
Okay. If you're not a first time home buyer, minimum percent down on conventional is 5%. 5%. Um, I mean, you can go up to, you can put as much down as you want to, but we'll talk about whether or not that makes sense for you when the time comes for you to get approved. But essentially, the reason I bring that up is if you're putting minimum percent down on a conventional loan, you need to have over a 710,
Okay.
roughly 700 to 710 if you're putting minimum percent down. If you're doing the full 20% down, you can probably get away with 660, 670. I've made it work before.
Okay.
And the reason for that, yes, you're going to be penalized in regards to rate. Like your rate, if you have a 660 credit score on a conventional loan, you're going to have a worse interest rate with conventional financing than if you had a 660 and went FHA.
Right.
Again, why? Because FHA favors the lower scoring
Yeah.
credit buyers. The
And
reason you'd want to go, yeah, go ahead.
just really quickly, that's why you talking to lenders like you is so awesome and helpful, is because this is so overwhelming, even just for a 5 minute conversation. But it's so nice because we can just hand you our information and you can go do the hard part. You can say, well, here you play. It's almost like Tetris, trying to figure out, does this work better for the buyer overall,
Mhm.
or is this going to work for them better over time? And I think you guys are so good at that, and putting them side by side and showing the buyer, here's your options. I would suggest this, but this is how it would be if you went the other way. And I think that that's just so impactful. And we always appreciate you doing that for the buyers.
Of course, yeah. That's where time in the seat kind of comes into factor. That's the things you hear me spitting off during our conversation. That's all just that's memory based on experience.
Right.
And that's the good part about having a lender that's been in it for quite some time. They say 2 years in this business is a lifetime because the guidelines change so much.
Yeah.
But
Look, we've been in our
it's
careers for a lifetime. It
yeah,
feels like a
exactly,
lifetime.
exactly. Yeah, so I've got a full 6 years under my belt, four full of them in sales. Prior to that, I was more of a transaction coordinator type role, just kind of learning the things I'm spitting off to you.
Yeah.
But yes,
Well,
that's the goal.
if somebody is struggling with their credit score, what is
Mhm.
your suggestion to them if I'm sitting at a 400 or 500 and I want to get up to the 620 mark? What is your first suggestion and maybe your second and third?
So the first suggestion, I'll always tee it up with if you need that small jump, I can probably do that for you. We're going to start looking at your credit utilization. So you typically don't want to spend more than 20 to 30% of your utilization. So for easy math purposes, if you've got $1,000 limit on a card, you really don't want to charge more than 200 to 300 bucks on that card without paying it off.
Okay.
Okay. That's a starting point. The second point is you need credit. Credit's like a muscle. So I always use it, compare it to being a muscle in the gym. Like if you don't work your muscles out in the gym, they're not going to grow.
Mm-hmm.
They'll wither and go away.
Yeah.
Credit's the very same way. You have to use your credit. You can't just get a credit card and not use it and expect your credit to do well. You have to use it, but you have to use it responsibly. In my household personally, we do not use debit cards at all. We use credit cards, but we use them responsibly.
Right.
So we're
I go
constantly
in
working that
and
muscle out.
I use my credit card, and then a couple times a week I just go in and pay it off. And I know that there's
Mhm.
like better ways, but I just don't worry about that. I just use my credit card and I pay it off, and my
Mhm.
credit score has increased
Yeah.
significantly.
Another thing is if you're finding yourself, if your maximum utilization on your credit card, like if your limits under 10 grand, I think you would want to work to get that better. Always apply for a higher increase on the credit. So you can, for me, on Capital One, you can go in the app or Amex, whatever you use, and you can hit request credit line increase. Do that as frequent as you can because as a household, if you spend more than 20 to 30% in a month, like that's just your normal bill schedule. But your maximum on your credit card is $2,000. You're maxing your card out every month, even if you're paying it off. Like your utilization is so high. So to get that down, you want to apply for a higher limit on the credit card.
Okay. But and I hear you keep saying you have to do it responsibly. So using it like it's real money, not like it's future money or credit, but
Right.
using your credit card like it's real cash and just
Mhm.
having that cash to replenish it. I also applied for the Capital One card. That was my first
Mhm.
credit card, and the lower one, the lowest one, and then recently I had now my second Capital One card, and it's a little bit higher, and my credit has continued to increase. So
Mhm.
that's kind of always been my advice to people, but I just didn't know if you would agree with me. So I'm glad to hear that that's true. If I'm really in a pickle and I need some assistance, do you guys have a program that I could kind of, you know, offer up to people to go on like a program for credit increase?
Yeah. So if it's that point 20 20 30 point jump, I can do that for you. We'll do that in house with me. Well, I've got a program that I can run to say, okay, if we pay X, Y, and Z cards off, the score will most likely do this.
Yeah.
That's pretty straightforward. There's also, we can take it as far as like looking at removing or adding people as an authorized user. That will sometimes help boost credit.
Okay.
And then, for example, it's usually used to increase credit, adding someone as an authorized user. But I've seen people with authorized users on their accounts where the authorized user is not doing what they're supposed to, and it's actually hurting their score.
Yeah.
So in that case, we'd have them removed. But to answer your end question here, we do have companies that we work with that I refer to when we need to get someone from 50 to 100 point jumps.
Yeah.
They're actually going to go to the bureaus, talk to them, negotiate, talk to you, negotiate, and figure out what's the best plan to get you settled with. Because most likely, if you're in that position, you've got something in collections, maybe a car's been repossessed, something of that caliber.
Yeah. Okay. That's super
So
helpful.
I would make that referral for them.
Awesome.
And I think the most recent one, I think it's, if you are in that position, I want to say it's like $75 a month, and they'll do that for you. But when you do that, understand it's not a quick fix. That's very, very important to set that precedence up front with clients, because credit at the end of the day, you're working with big entities that, it takes time for that stuff to process. Credit's like trust. It's easily given, hard to earn back after you break it. Right? So credit,
That's a good saying.
credit's the same way. So be patient with this. It could take anywhere to get someone from a 500 to a 600. That could take 6 to 12 months, depending on the things that need and the cash that they have available to use towards making that score better.
And that's why I tell people, if they're a year out from buying a house, to go ahead and talk to you, because if there's a credit situation there that they don't realize, they're a year out, they have time to just work on it and be patient. But when people don't, and then they get blindsided and then they're backed up a year, it can be so devastating.
Yeah, and that's a great point, Alex. It's a lot of individuals, they're going to look at their credit score based on Credit Karma or any of the credit monitoring apps, and use those to say, okay, my score, Credit Karma says my score is a 700. I'm at a 700. It's very important to understand that is a good indicator of positive or negative movements in your score. Like if Credit Karma is giving you an update, and it says, I use Credit Karma and I'm a lender, but I use it correctly, right? We need to understand that's not, my score is not exactly what it's saying it is. But it's positive, negative movements in the score. So if you get an alert, your score just dropped, you've done something wrong.
Right.
If you get an alert, your score has increased, you've done something right. However, Credit Karma is more of a instant snapshot of your credit right now.
Right.
It doesn't completely factor in what a mortgage pool does. A mortgage pool is going to look at your entire credit history, right? You're in this mortgage for 30 years. So we're going to look back and see historically, how well do you make your payments? Are there late payments? Are there things on there that we should know about? And your score is derived from that.
Right. Okay.
Again, Credit Karma is more of the snapshot. A mortgage is a full, in-depth, anything past due that has been past due in the future. So past due stuff, Credit Karma is going to look at, is it currently past due? A mortgage pool is going to look at, have you ever had anything past due?
Right.
So that's another
more of your flaws and all that. Quick question before we wrap up. The advice you've given me today, is this specific to Northeast Florida in general, or does this basically apply to anybody that might be watching this video outside of state?
This is anybody.
Okay.
This is a good credit 101, straight from the horse's mouth. Again, there are better individuals to help get those big boosts in the score, but from my business and my industry, we do know more than the average bear.
Awesome.
So
thank you. I learned a lot today. I appreciate it. Anything we missed?
I don't think so.
All right. I hope you have a good day.
You as well. Thanks, Alex.
Talk soon.
See you next week.
Bye.